December was a big rally month across markets globally, a bit of a Santa rally, as we sometimes say. This was due to a feeling that the Fed and other global banks would be easing a bit earlier than we thought, perhaps initially, and that just generally gave equities a boost, but also it gave those equities that had been most in the doldrums the biggest boost. So if you're out of favour for most of 23, you were probably in favour in December, and to some extent vice versa. If you've been in favour, you were relatively less popular. But the markets went up pretty strongly, and in the UK in particular, it was a catch-up time for the UK mid-cap, which had been particularly weak into October, November, and had quite a big rally in December. So at a fund level, the mid-cap rally generally was a pain at the index point, and while we have a very balanced portfolio, I guess it would be fair to say that our short book was squeezed a bit, pushed a bit more in that mid-cap rally than our long mid-caps rallied. So in the end, that was a negative overall headwind for us, and the fund delivered a small negative after a really strong year. So we didn't react super strongly to this at the time. We felt that, and we do feel that there's a bit of reversal coming here, and this was probably a bit of a one-off month in terms of how sharply some of these things rallied. But yeah, clearly we had some shorts like IWG that were pretty strong in the month. And we had plenty of really strong longs like Whitbread and OSB, Marks and Spencer. So a really broad range of shares performing on the long side, and maybe one or two of our shorts and our index shorts in particular in mid-cap causing us a bit of pain there. So yeah, a little bit disappointing to end the year with a slightly down month, but overall this has been a very strong year for the fund and the strategy, and in pretty difficult and changing market conditions. And we see no change in the opportunity set going into 24. In fact, we think there's probably quite a good opportunity for some of the excess excitement at the back end of 23 to settle a little bit as we look into 24 and see where the real opportunities are. There's clearly some exciting opportunities out there. There's some very undervalued sectors. In the UK, we have an election, likely probably in the second half. And we think an election is quite an interesting one in the UK, and that it isn't necessarily a negative for markets. UK political situation, probably expecting a left-leaning or a Labour centre-left government to come in. They've been making some fairly supportive noises about markets. So actually, a stable, boring market political change may not be a bad thing in the UK market either. So I think the market will get used to that fairly quickly if that comes to pass. Clearly, we've got all the usual geopolitical stuff that we've had for the last few years to work our way through as well. But at a market level, we see some fantastic valuation opportunities on the long side, and what we have going into this year is perhaps a slightly more realistic expectation of earnings. In that it doesn't look like earnings expectations are too stretched; they're in quite a good place. So scope for beats maybe a little bit higher. Very conscious about some of our good shorts. Some of these shorts were painful in December, and some of them maybe rightly so. Some of those shorts have probably played out for us now, and we will need to move on from them, and we have been adjusting the portfolio accordingly. So thank you again for your support in 2023. It was a difficult year, but we're delighted to have delivered you a strong return, and we look forward to continuing that process as we go into 24 and keep working month by month to build a good return over the whole year.